A whole new property market is opening up to international buyers, and it's from the Middle East's largest economy. Starting in January of 2026, Saudi Arabia will allow foreign investors to buy property in the kingdom. This has global investors eager to find out how they can tap into the country's fast-growing real estate market, which is expected to reach more than $94 billion by 2028. Investors want to ride the wave of the kingdom's economic growth, which has been driven by transformational new policies and mega project cities dotting its landscape. But how easy will it be for a foreign investor to actually buy in the kingdom comes into question. Will there be a language barrier? Are the kingdom's regulatory systems able to work with foreign buyers yet? There are already restrictions that apply to foreigners, as they can only buy in Riyadh and Jeddah, and there are further limitations in the holy cities of Mecca and Medina. Not to mention, like in the rest of the Gulf, Saudi Arabia's rental prices are already high, and foreign investment is set to make it less affordable for people living in the country. We explore these questions and more on this episode of Business Extra. I'm your host, Salim A Essaid. We're hearing from Faisal Durrani, a partner and the head of research for the Middle East and North Africa at Knight Frank Middle East, a real estate consultancy firm. Faisal, thanks for joining us.
Thank you, Salim, for having me.
Can you start by telling us why Saudi is doing this now in terms of opening up its market to foreign investors?
Sure. Look, Salim, we've been expecting this announcement for quite some time. One of the key pillars of Vision 2030 is to provide world-class housing to Saudi nationals. And of course, we've seen a vast number of so-called giga projects being announced since 2016. In fact, we've got about $1.3 trillion worth of real estate projects and infrastructure projects that are currently planned or underway across the kingdom. But alongside that is a goal to boost FDI investment into the kingdom. And of course, the real estate market is going to play a key part in delivering that ambition of the government. We have anticipated this law change for some time, and the announcement that was made recently to allow international investors access to the real estate market in what we understand is designated zones is tentative steps in that direction to help internationalize the real estate market, if you like.
And obviously, when you speak about investment, you always think of the return on that investment. So when foreign investors are looking to invest in this new market, can you expect a high appreciation? I mean, I'm sure the first thing that's coming to people's minds of what's going to be, if I buy property today, what can I expect?
A good question. I mean, look, one of the key pillars of Vision 2030 has been to provide Saudi nationals with world-class housing, which is why we've seen the construction boom we have over the last 5 or 6 years. So it might not be surprising for you to hear that we have seen apartment prices, villa prices skyrocketing. Since 2019, apartment prices in Riyadh, for instance, are up about 82%. And at the same time, of course, incomes have not kept pace with that level of growth, which has created some affordability challenges in the market. And look, as part of the government's Vision 2030 ambition, the goal is to boost the home ownership rate among Saudi nationals to 70% by the end of the decade. We're currently sitting in the mid-60s%, and that is up from about the mid-40s% when Vision 2030 was first announced back in 2016. And the government has worked very hard behind the scenes to facilitate that transition for Saudis who are aspiring homeowners through various programs and initiatives such as WAFI, such as Sakani, through long-term mortgages on fixed interest rates. And that has helped to push up that home ownership rate. But we are approaching a point now where it does appear that house prices might be growing faster than people can afford. And so we're seeing households being forced into a holding pattern as they save increasingly larger deposits. But at the same time, we're getting tantalizingly close to that 70% target. So it's only natural that the demand for home ownership starts to recede. But your question around demand from investors around housing or residential real estate as being an attractive investment, at the same time, as part of Vision 2030, the government has a goal to boost the international population, to attract more expats into the kingdom. So in addition to that, we've got a young and dynamic population. 60 to 70% of the population of Saudi is below the age of 30. We are also seeing many Saudis leaving home at a younger age, migrating around the kingdom in search of better employment opportunities. Chiefly, they're moving to Riyadh. And over the last 5 years, our calculations tell us that about 50,000 young Saudis have moved to Riyadh every year for the last 5 years. And a lot of these young Saudis, when they arrive in the capital for the first time, their focus isn't necessarily on buying a home, it's on renting one because they're not sure how long they're going to stay there. And they're looking for smaller properties, studios, and one-bedroom apartments. And these are in extremely short supply. And they're also in short supply in professionally managed developments. So those are the types of assets that would be particularly attractive to international investors at this early stage.
Well, that's a really good point, identifying what the need is. And as you said, it's affordable housing for young people who are looking for accommodation. But on the flip side, though, I mean, come January 2026, isn't this going to be like a sudden injection of foreign money, meaning that prices could skyrocket as a result? I mean, do you see that also increasing the cost of living, particularly with rent for young Saudis?
I think we have to remember that international buyers and investors have already got access to the real estate market in Saudi. So expats that live and work in the kingdom, provided they meet certain conditions, are able to buy a home. One of the conditions that's attached to that, of course, is that they must live in that property and it must be their main residence. Last January, the Saudi government introduced a range of premium residency options, one of which is connected to property ownership. There are conditions attached to that too. For instance, the minimum spend is 4 million rials. However, I will say that I am not a lawyer and Knight Frank is not a law firm. We are a property consultancy. But in the law that provides for this new premium residency linked to property ownership, it states that the buyer must purchase properties, plural, for a minimum of 4 million rials. So for the first time, the door was opened on multiple property ownership, paving the way or suggesting that investors could be buy-to-let investors. The other strings are a bit more stringent that are attached to it. The properties must be completed and there must be no mortgages or debt against them. So the pool of people that could buy those properties is quite limited. But nonetheless, that route does exist. And we saw late last year the decision to allow international investors access to properties in the holy cities of Mecca and Medina through investing in shares in property companies listed on the Saudi stock market. So that is already possible. Of course, this change that now comes into effect in January, from what we understand, will be restricted to specific areas, neighborhoods, or investment zones. And we feel this is very much mirroring what was done in Abu Dhabi and Oman when those markets were initially opened up to international buyers and investors. So to answer your question, yes, it's quite likely that prices in these investment zones will outperform the rest of the market, if you want to call it the mainstream market, where price growth will probably be a little bit more mute given those affordability challenges.
No, I think you put that in good context. And it's not the first injection of foreign money into buying property because, as you said, residents there are already able to do it under certain conditions. And you mentioned something as well about where foreigners can actually buy. So because I was reading about that as well in terms of certain areas have restrictions, and then also that a lot of the opportunities are in the mega project city areas, such as the Neoms, the Line, and such. Do you see foreign investors really targeting those areas, or where do you actually see foreigners actually investing in?
So every year we publish something called the Saudi Report, where we look at international and domestic demand for real estate assets in the kingdom. And when we investigated demand from global Muslim high net worth individuals who are non-resident in the kingdom, we actually found that 82% of them are keen on owning a home in either Mecca or Medina, over and above the existing cities of Riyadh and Jeddah. That's not to say that they're not interested in those giga projects, because when we ask them which giga project you would most like to own a home in, Neom tops the wish list. And that's probably because it is such a well-known project. It is the crown jewel in His Highness's vision for the transformation of the kingdom. But other projects like Jeddah Central also come up pretty high on their wish lists. And what we found over time, because we've been doing this for a few years now, is that projects like Diriyah Gate are actually perhaps being eclipsed by other projects that are newer, that are more well-known, and that perhaps are even perceived to be a little bit more affordable. But projects like Red Sea Global's developments on the western side of Saudi also feature very highly, as does Al Ula. So yes, the global investment community is very much aware and very interested. But I think we need to see some product, we need to see some development before these investors probably boost their interest in these specific locations.
And as you mentioned, there's a lot of interest in Mecca and Medina. Is that because a lot of Muslim investors would want to seek property there? Are you seeing that type of interest from that type of foreign investor?
Yeah, I think, look, the rationale for wanting residential real estate in the holy cities is quite different to the rationale for wanting to buy elsewhere in the kingdom. Of course, we all understand that it is the expected duty of every Muslim to perform Hajj once in their lifetimes. And owning real estate in either of the holy cities brings with it a certain amount of prestige. And I think from our analysis, what we understand is that a lot of these international Muslim high net worths see themselves owning a home there to spend the rest of their days, not necessarily purchasing it as an investment property. So the rationale is very different. Whereas if they're looking at Riyadh or Jeddah, it's very much investment driven. They're thinking about the returns, and it's a totally different kettle of fish.
Yeah, it seems like there's a whole spectrum of the type of buyer and what their interest is in Saudi, given its many options from the mega cities to the more traditional holy cities. So yeah, I think that's a very interesting point. Seeing the feasibility of all this. So I think it's very inspiring, a whole market opening up, but then sometimes things are easier said than done. How easy is it for maybe an international investor that doesn't speak the language, for example, to invest in Saudi? Do they need to, for example, have someone that understands the law in particulars? How easy is it basically to invest starting in January?
I think it's a very valid point. I think you need to work with someone who's got a presence on the ground, somebody who understands the market inside out and understands all the nuances of this new law. Of course, we've only seen a draft. We are still awaiting further details, and it is going to change with time, and there will be layers added upon it. I think if we cast our minds back 25 years ago to think about when the Dubai real estate market first opened up and how far it's come since then in terms of the rules and regulations, we're still seeing new rules and regulations added today to protect international buyers and investors. And that will come with time if we are to create a truly international and global investment market. But this is certainly a very positive step, and will go some way to helping the government achieving its vision of attracting greater FDI.
That was exactly going to be my next question, because I was kind of assuming you'd answer something similar about that. Yeah, it's going to take time to develop the regulations that make it easier, but of course you have to start somewhere, right? And especially since Saudi Arabia is the region's largest economy, and now it's opening up its property market even further. So how would you say that, what stage is it at currently, for example, compared to the UAE? Because what we know from Dubai and Abu Dhabi today, when it comes to real estate, it's internationally renowned. So like Saudi, how do you see it progressing over time, and what stage would you say it's at?
I mean, look, I would say from a domestic perspective for Saudi nationals, it's pretty transparent. It's open. They know what they're buying. There is a lot of information out there. But from an international perspective, I feel there isn't much information flow. Data transparency levels might not be the same as what international investors expect in their own home markets. And in that regard, a market like the UAE is ahead in that sense because there is much more data out there. There are more international players on the ground. But I expect that this will change with time. And given the ambition of the government to transform the economy and reduce the reliance on hydrocarbons, I think we're very much at a sort of ground floor stage now. So it will be very interesting to see which investors rush in to take advantage of this change come January next year.
And the way I see the UAE compared to Saudi, it's that I guess it's the closest glimpse of we have to Saudi's future. So how would you say that property ownership in the UAE has changed over the years, just to kind of get a sense of where Saudi could be going?
Sure. I mean, look, I don't think it's necessarily fair to compare the two markets because the drivers are so different. The demographics are so different. In Saudi, we've got 60% of the population are Saudi nationals. In the UAE, it's somewhere in the region of 10 to 15%, and the rest is made up of expats. The UAE real estate market is very much driven by expats and more recently driven by international high net worth individuals who are relocating their families and businesses to the UAE. Whereas in Saudi, at this early stage, I suspect we will see a lot of people who have been waiting on the sidelines for the opportunity to relocate there, particularly to the holy cities. and also investors who are looking for buy-to-let properties. And certainly the expats who are moving to the kingdom and perhaps finding the increase in rents something they're not able to afford, and perhaps property ownership might be cheaper. So I think that's where we will begin, which is very much similar to how the story began in Dubai or Abu Dhabi or Oman before we start to see greater international investors. But I think the key is we need to see some progress on some of these giga projects or in these areas where international investors will be permitted to buy property. I think that is going to be key because people need to see what they're going to be investing in.
Yeah, and I think you really touched on something important, that it's what we're seeing as well. Okay, the prices might be higher, but compared globally, it's still very competitive and you're getting more for your buck. But at the same time, it's also the quality of life that's attracting people and all of that together. And now with Saudi opening up its market, being another region, a market in the Gulf that people can invest in, do you see a collective contribution to that in terms of really elevating the Middle East and Gulf on the global stage when it comes to investment, when it comes to property?
Certainly. I mean, look, if we zoom out across the whole region, between, say, Cairo and Mumbai, we've only got one global hub city, and that is Dubai in the region. If we think about other regions of the world, you've got global cities that are all within an hour's flying time of each other. In Europe, you've got London, Paris, Frankfurt. As a trio, in Southeast Asia, you might have Singapore, KL, and Hong Kong. In North America, you might have New York, Toronto, Boston. And when it comes to the Middle East, aside from Dubai, we haven't really got another similar city. However, what we have done is try and take a look at some of the things that make global hub cities. And one of the key indicators is connectivity between these cities. And if we were to look at the top travel destinations out of London Heathrow or Charles de Gaulle, you'll routinely find each other cities in the top 3 or top 5. And today we already have that pairing in place between Dubai and Riyadh. So that is already starting to emerge. So whether it's Riyadh or another city in the kingdom, there's certainly room for another global hub city, and it's great news for the region.
Yeah, definitely. It reminds me of, like in the EU, for example, traveling between countries there with Ryanair, cheap flights, and then it really builds that ecosystem of when you're buying a property in the UAE or in Saudi, you're essentially buying it into the region and getting all that access. So yeah, it seems like that's what the future is going to look like in terms of really developing that. So, I mean, thank you so much. This is really insightful. I think there's so much more to discuss, but yeah, I really appreciate your time.
Thank you, Salim.
Thanks for listening to this episode of Business Extra from The National. Make sure to check out The National's podcast wherever you stream. Also, help us improve our podcast by taking our 2-minute listener survey. You can find the link in this episode's show notes. This episode was produced by Yasmin Al-Taji. Arthur Edison is our audio engineer. Our podcast editor is Duat Farid, and I've been your host, Salim A Essaid.